Ora, sejam todos bem-vindos a mais um webinar da série Chicago Trading Sessions. Iremos iniciar este webinar nos próximos minutos. Vamos pedir apenas alguns instantes para que todos os registrados possam aqui juntar a nós e que possam aqui também participar. Entretanto, e enquanto aguardamos que todos os participantes tenham esta oportunidade, iria pedir se me podem confirmar que estão a conseguir ver o ecrã e que me conseguem ouvir efetivamente. Como sempre, vão conseguir fazer a interação connosco através da linha de chat que têm disponível no lado direito do vosso ecrã. E se pedir-vos, se me puderem confirmar que conseguem ouvir corretamente e que conseguem ver o ecrã, eu agradeço essa confirmação. Não. O valor que faz, depois às 4h30, talvez seja mais fácil. Exato. Está bem, então vá, amigo Ulisses, daqui a 30, 40 minutos eu ligo. Até já, obrigado. Até já. Sim. Agradeço a confirmação, referindo que me conseguem ouvir efetivamente. Vou-vos pedir então para dar aqui só alguns instantes e iremos iniciar aqui o webinar. Apenas alguns segundos. Ora, bem-vindos novamente aqui ao webinar da Chicago Trading Sessions. Hoje vamos falar aqui sobre Forex, negociação de pares cambiais. Recebi aqui a indicação que me estão a conseguir ouvir, mas fazia o pedido a mais participantes que me puderem dar essa confirmação, pois estamos aqui a receber algumas indicações que alguns de vocês não estão a conseguir ouvir corretamente. Agradeço se me puderem dar essa confirmação no chat, que estão a conseguir ver o ecrã e que me conseguem ouvir efetivamente. Ok, perfeito. Assim sendo, vamos dar início aqui à nossa apresentação. Hoje vai ser aqui uma sessão teórica, novamente com o Eric Norland, o diretor executivo e economista sénior na CME, ou seja, na Bolsa de Chicago. E ao dia de hoje vamos abordar aqui a negociação sobre pares cambiais, o vulgo Forex, efetivamente, utilizando, é claro, aqui mecanismos alternativos, novamente como futuros ou opções, sobretudo, e vamos tentar dar aqui, como é óbvio, um novo enfoque aos microfuturos, por serem aqui um mecanismo muito recente, efetivamente, ou seja, já existe a negociação de pares cambiais através de futuro já há algum tempo, mas os microfuturos são mecanismos relativamente recentes através da CME e que levam aqui também a esta parceria do BIG com a Bolsa de Chicago. Falando um bocadinho de Eric Norland, tal como referi, ele é diretor executivo e economista sénior na Bolsa CME. Ele vai abordar aqui este tema, é alguém que já tem uma experiência muito relevante na área de mercados financeiros. Ainda antes do mesmo se juntar à CME, já apresenta aqui uma carreira superior a 15 anos de experiência ligada à área. Ele trabalhou em banca de investimento nos Estados Unidos e em França. Já fez aqui vários tipos de análise aos mais diversos tipos de ativos. É alguém com um currículo exímio na área, efetivamente, e como tal, vamos trazê-lo novamente para mais uma sessão teórica do Big Trading Sessions. Assim sendo, e sem mais demoras, eu vou passar aqui a palavra ao Eric. Relembro a todos que esta sessão é uma sessão em inglês com moderação em português, por isso sintam-se completamente à vontade para colocar qualquer questão que pretendam em português no chat. Eu terei todo o gosto em responder, ou até em inglês, e transmitirei ao Eric a questão em causa para que possamos aqui esclarecer toda e qualquer dúvida que possa surgir. Assim sendo, sem mais demoras, vamos apresentar então aqui Eric Norland. Let's welcome Eric Norland, a senior economist on CME Group, who will begin his presentation. Welcome, Eric. I don't know if you can hear me now.
I can, yes, thank you.
Thank you. You could proceed. All is good. Anything that anyone need, please tell us in the chat that you have on the right side of your screen, and we'll be happy to help. Thank you, Eric.
Okay, thank you very much. Yeah, so thank you all so much for joining. It's a pleasure to be here once again to do a presentation, this time on foreign exchange. Foreign exchange, in some ways, is a very strange asset class. Essentially, it asks you to do something very abstract. It asks you to value the paper currency issued by one central bank versus a paper currency issued by a different central bank, and to try to figure out which one might be heading higher and which one might be heading lower. So the economics of it are kind of interesting and kind of unusual. I think that depending on the currency, there are usually 4 or 5 different forces that sort of guide the currency and pull it one direction or the other. Before we begin the presentation, I am required to show you both this relatively short version of CME's disclaimer, as well as the longer and more detailed version of our disclaimer, which essentially says, as before, that because the exchange, because we are an exchange operator and not a broker-dealer, we cannot give you any sort of investment advice. So no investment advice is given or intended. And this version of the disclaimer just talks about our organization in various places around the world. So I thought that we would start today by discussing the most widely traded exchange rate in the world, that between the euro and the US dollar. The US dollar is a global reserve currency, kind of the global reserve currency, in which a great deal of international trade is done. Approximately 60 to 65% of international transactions are done in US dollars, and about 60 to 65% of global central bank reserves are held in US dollars. But the second most important currency in the world is, of course, the euro. The euro is about 1/4 or so of the world's total international trade volumes, and it's also about 1/4 of central bank reserves around the world. So between the US dollar and the euro, together they make up around 90% of all global transactions. The other 10% are done in a variety of other currencies, many other currencies, the most prominent being the Chinese renminbi, the British pound, the Japanese yen, the Swiss franc, the Australian and Canadian dollars. And of course, we'll talk about those currencies as well as a number of other currencies I will highlight briefly, like the Russian ruble and the Brazilian real. So when I look at the US dollar exchange rate versus the euro, or the EUR-USD, as it's abbreviated in the currency markets, I think there's one thing here that's very interesting in this chart, which is that between 1980 and 2015, there were enormous moves in the euro-US dollar exchange rate. There were long periods, like in the early 1980s and the late 1990s, and again between maybe 2008 and 2015, in which the dollar strengthened a great deal and gained a lot of strength versus the euro. And there were other periods, like from 1985 to the early to mid 1990s, and again from 2000 to 2008, in which the euro and its predecessor currencies were very, very strong versus the US dollar. But during the last 6 years, the exchange rate has gone sideways. And so I think that in some ways in the last 6 years or so, it's kind of lost the attention of a lot of traders around the world. The last 6 years have been exciting in the markets. If you were trading oil or commodities, or if you were trading equities or even government bonds, there was a lot of big moves in those markets. But for some reason, which we're going to explore, the euro-US dollar kind of went sideways for the last 6 years. And that lack of volatility, I think, made a lot of investors, especially retail investors, lose a bit of interest in the currency. But this presentation, one of its points will be that there are essentially 4 forces that govern whether the euro is increasing versus the dollar or falling versus the dollar. And some of those 4 forces might be about to line up in a way that causes a really big move in the relative value of these two currencies. So what are the 4 forces? So the first of the 4 forces, I think, that moves the euro versus the US dollar is the relative size of budget deficits. So here we have a chart of the US budget deficit in the Eurozone's average budget deficit across the Eurozone, or kind of aggregate, I should say, budget deficit across the Euro area. So one thing that's interesting is in this chart is the incredible deterioration of the US fiscal position over the last 22 years. In the late 1990s and early 2000s, the US was running a budget surplus, whereas Europe was running deficits. Now they're both running deficits, but the deficits in the United States since about 2007 have been consistently larger than those in the euro area. And particularly during the last 5 years or so, the deficits have been much, much larger. Before the pandemic, Eurozone deficits were becoming smaller and smaller, whereas the US deficits after Donald Trump's tax cuts were becoming bigger and bigger. And then since the pandemic, both the Eurozone and the US deficit have expanded, but the US deficit grew to be roughly twice the size of the budget deficit in Europe. Now, what I think is important here is not the absolute size of the deficit, but the difference between the two. So in the next chart, what we do is we take the Eurozone's deficit and we subtract it from the US deficit. So when it's positive, that means the Eurozone is running a smaller budget deficit than the US. When it's negative, that means the Eurozone is running a larger budget deficit. So I think it's pretty clear in the first half of the chart that the Eurozone's fiscal situation strengthened versus the United States between the late 1990s and around 2010. And that was a period in which the euro itself strengthened a great deal, going from a low of about 0.83 versus US dollar to a high of about 1.6. So between 2000 and 2008, it roughly doubled in value versus US dollar. Then between 2009 and about 2016, the US budget deficit shrank more quickly than deficit shrank in Europe. And the US dollar gained a lot of strength during this time, but then the deficit began to expand in the US, and the US currency has weakened a little bit since then. So that's one of the 4 forces, but it's not the only one. The next really big force is another thing that can be a trade, it can be a surplus or a deficit, which is trade, or what's sometimes known as the balance of payments or the commercial balance of a country. So here too, there's been a big difference. In the late 1990s, both the euro area and the United States ran trade deficits. But the difference was that the US has continuously run a large trade deficit, typically of around 4% of gross domestic product, sometimes more, sometimes even more, like 5 or 6% of GDP, really for a very long time, even going back to the 1980s and late 1970s. This is a result of the United States having the global reserve currency. The global reserve currency brings benefits to the United States. For example, when the United States becomes angry with a country, like Iran, for example, the United States government can use its power of having the global reserve currency to prevent the Iranians from easily transacting in US dollars. basically saying that no bank anywhere in the world is allowed to clear transactions with Iran in US dollars. And then if they find out that they do it, they can punish those banks by denying them access to US dollars and to US clearing. But it also comes with a curse. And the curse of a strong, of the reserve currency is that the currency is sort of in general structurally overvalued. So the US dollar is structurally overvalued, which causes US exports to be expensive and not very competitive. And it causes imports from an American perspective to be very cheap. So a lot of capital comes into the US and that causes a trade deficit, which also contributes to the deindustrialization of the country, which of course has become a big political issue, especially in the last 5 or 6 years. By contrast, the Eurozone went from having a trade deficit to coming back to sort of neutral between 2000 and 2012. And then, as a result of the extended crisis in Europe after the global financial crisis, moving into a trade surplus, where countries, particularly in Southern Europe, like Portugal, Spain, Italy, and Greece, had to run essentially trade surpluses in order to start paying down debt. Same was true for Ireland and a number of other countries. And then there's other countries in Europe like Germany that typically run large trade surpluses. So when you graph the difference between the Eurozone trade deficit and the US trade deficit in the black line versus the currency in the blue line, you can see that there's some correlation. It's not perfect, but basically the budget deficits and the trade deficits would argue that the euro should be very, very strong right now versus the US dollar because Europe is running trade surpluses, whereas the US has a deficit. And on top of that, Europe has smaller budget deficits than the US has. So those two factors alone would suggest that the euro right now should be an incredibly strong currency. But as you've seen, it's not. The euro is kind of, going at about its average level since inception. So there are two other forces that we need to get to, and those two other forces happen to be pulling in the opposite direction. So what are they? Well, one of them is economic growth. There's a lot of different ways you can measure economic growth. You could, of course, look at changes in gross domestic product. The country with stronger economic growth typically has a stronger currency. So part of the problem here is that, well, first of all, let me just say, I prefer to use retail sales. Retail sales, I think, are useful because they come out monthly. You don't have to wait an entire quarter in order to get an update like you do with gross domestic product. But what's interesting here, though, is that from 2004 to 2009, or even 2010, the US and Europe did about the same. The US and Europe both grew in between 2004 and 2007, and then both economies shrank in 2008 and 2009. But then, starting in 2010, they began to diverge. The US economy did a lot better in the 2010s than the European economy did. And I think that's in part because the European Central Bank made some really, really bad policy errors in 2010. For some reason, Jean-Claude Trichet decided to raise interest rates. And there were other people on the ECB's board like Axel Weber that were also advocating a tighter monetary policy, which of course everybody in Portugal, as well as Spain, Italy, and Greece knows had catastrophic consequences for the debt markets in Southern Europe. Those economies were not ready for higher rates. And in fact, there was no reason to raise rates at all. There was no problem with inflation beyond some temporary increases that were caused by increases in consumption taxes, like value-added taxes and reductions in subsidies in certain countries for electricity or education. And so anyway, this produced a disastrous result. The euro economy fell into a second recession that the US did not fall into. US economy continued to grow. And then, from 2015 to 2020 or so, they did about the same. The US economy and Europe were both growing, but about the same pace. But then after the pandemic hit, the United States overstimulated its economy. So if you go back a couple of slides and you look at the size of the budget deficit, the US just spent a lot more money than Europe did. When I presented to you previously, we talked about how US inflation rates went up a great deal more as a result of the stimulus, but it wasn't just inflation that went up, it was also US consumer spending did a lot better than Europe. So on the one hand, US is running a bigger budget deficit, but on the other hand, the US is doing better economically because its consumers have a lot more money and they're spending a lot more money. And this will have consequences in other ways as well. But generally speaking, stronger economic growth is good for a currency. And for the period from, say, 2008 to 2015, you can see that Europe underperformed the US in economic growth. And lo and behold, the euro fell versus the US dollar. Then from 2015 to 2020, they did about the same. And then more recently, Europe has underperformed again versus the US dollar, but the US budget deficit has also exploded, and so has the trade deficit. So essentially, economic growth is pulling the dollar higher, but the budget and trade deficits are pulling it lower. So the US dollar isn't really going very far. But the US overstimulating its economy has a consequence for the last force that really acts on this currency pair, and that's interest rates. So interest rate differentials also tend to correlate pretty highly with moves in currencies. So here we have the two sort of primary short-term interest rate benchmarks for the US, the euro dollar, and for the euro area, the Euribor futures. And you can see that they kind of did the same thing from about 1999 to 2010. Not always exactly the same, but more or less the same. And you also see in 2011 that huge policy mistake from the European Central Bank when they made an unnecessary rise in interest rates. It caused a double dip recession in Europe that did not happen in America. But after 2015, something really strange happened. Europe basically put interest rates negative, where the US didn't. The US actually tightened policy in 2016, 17, 18, and 19. So on the one hand, during those years, the US trade deficit was, or the US budget deficit was expanding, so it was dragging the dollar down. But at the same time, the US was growing more quickly and the Federal Reserve was raising rates, so it was pulling the dollar back up. And so these two forces were roughly in equilibrium and the currency pair didn't really move very far. If you subtract the euro dollar rate or the Euribor rate, if you subtract euro dollars from Euribor, and you compare it to the currency, you can see a fairly close match. It used to be, maybe a couple of decades ago that the currency would move with a delayed reaction. Now it seems to move more or less with a simultaneous reaction. But the nice thing about Euribor and euro dollars is that they have forward curves that tell you what investors think is going to happen in the future. So what investors believe is going to happen in the future is that the Federal Reserve is going to raise rates more quickly than the European Central Bank. Essentially, the Fed's rates are just above zero right now. And the market thinks that within 5 years, they'll be between 1.5% and 2%. By contrast, the European Central Bank has its rates at negative 0.5%, and the market thinks that maybe they'll get back to zero sometime around the middle of the decade. So all of this sort of argues in favor of a stronger US dollar, at least because of interest rates and because of the growth gap. But on the other hand, as we saw earlier, the US has a bigger budget deficit and a bigger trade deficit. So I think the ultimate decision about whether the euro goes higher or not depends on the relative strength of these four forces. If they continue to be evenly matched, some pulling higher and some pulling lower, then the currency pair might not move very far. But eventually, one set of forces might align to become a lot stronger than the other set of forces, or perhaps even sometime three of the forces or all four of them may be pulling in one direction, and you could have a tremendous move in a currency, like we saw many, many times between 1980 and 2015. But there's another thing I'd like to mention here, which is, we see here that the European Central Bank has negative interest rates. And so negative interest rates themselves are really, really strange. Now, the European Central Bank put interest rates negative for the purpose of discouraging people from holding euros in banks. So the idea was if you put interest rates negative, it would force people to go out and spend or to invest the money, to take more risk. And another idea that the European Central Bank doesn't talk about, but is probably true, is they probably put interest rates negative with the hope that that would cause the euro to weaken versus other currencies. However, there is a strange phenomenon here, and it's not true only in Europe. It's true also in other, I should say only in the Eurozone. It's also true in other places that have had negative interest rates. Which is that as the ECB began to put interest rates more and more negative, the euro did not weaken. It weakened at first, the first time they went to -10 and -20, it weakened. But then as they put rates to -30 and -40, the euro became stronger. And curiously, as they put interest rates more negative, the amount of money held on deposit with banks in the euro area actually started to increase, which is very counterintuitive. But essentially, it seems like negative interest rates are a tax on the banking system. And it's actually slowing down economic growth, but it's causing more people to hoard the currency because they're afraid to spend it and afraid to invest it. The Eurozone, as I mentioned, is not the only place with negative interest rates. That's also true of Switzerland. Switzerland is a relatively small country, but its currency is often used as a flight to quality instrument, much like bonds are in the United States. So when things are going badly, people often want to hold Swiss francs. And this is very problematic for Switzerland because as the global economy experienced a crisis in 2008, the trade-weighted currency in Switzerland went from essentially 100 in the Deutsche Bank index up to 160, which put tremendous deflationary pressures on Switzerland. It made their exports unaffordable. You could argue that doesn't necessarily matter because their exports tend to be highly specialized goods like Rolex watches, for example, or pharmaceutical goods, or expensive chocolates, etc. It's the people who buy them are not necessarily very price sensitive since they tend to be quite wealthy. But the Swiss National Bank, though, did take some pretty abrupt action. So in 2011, they essentially forced a devaluation of their currency to prevent it from strengthening and then put a cap on it. And then in early 2015, they decided, okay, we're going to lift the cap and we're going to put interest rates negative. So first they cut interest rates to -25 basis points, and then they went to -75 basis points, which is still where they are today. And that did not prevent the currency from strengthening. The currency strengthened anyway. Another currency that's dabbled, another country that has dabbled in negative interest rates is Sweden. Sweden cut interest rates negative, but then eventually brought them back to zero. The Swedish currency, I won't go into detail about, but it has weakened a lot versus the euro and other currencies, I think mainly because of trade. Sweden used to have really big trade surpluses of 10, 11% of GDP. Their trade surpluses have shrunk to around 2% of GDP. So I don't think that negative interest rates explain much of what's happened there. But their currency has gone down because I think mainly because of trade. Sweden's a very expensive country to produce goods in, and because it's so expensive, they're starting to lose a lot of their manufacturing base. The last country that has done negative interest rates is Japan. And so Japan has sort of a fascinating and strange currency that we'll talk about a bit as well. Japan's interest rates only went to -10 basis points, but it's interesting, on the day they went negative, on the 29th of January 2016, the yen strengthened a great deal versus the US dollar. So we've seen that negative interest rates don't weaken currencies. In Europe, they didn't weaken the yen and they didn't weaken the Swiss franc. If anything, those currencies became stronger after interest rates were put negative, which to my mind is a warning sign that interest rates, the negative interest rates are counterproductive. They are meant to cause the economy to grow more quickly, but they appear, if anything, to cause the economy to grow more slowly and cause people to hoard a currency and to push it more deeply into deflation. But there's one last thing we need to talk about, because negative interest rates are not the only strange thing that's happened in monetary policy over the last decade. The other strange thing that's happened in monetary policy is the use of quantitative easing. In quantitative easing, central banks essentially create digital money. They create new money digitally, and they use that money to buy assets. What kind of assets they buy depends on the central bank, but most typically they buy government bonds, which is a large share of what's done through quantitative easing. They often buy agency bonds, so bonds that are not technically government bonds, but are issued by agencies that are authorized by the government to have specific purposes. And then and that includes a lot of mortgage bonds, for example. And then more recently, they've been doing other things. In particular, the Bank of Japan has been buying corporate bonds, which the Federal Reserve did a little bit of last year. And they have also been buying equity ETFs. So essentially, they've been buying exchange-traded funds of Japanese stocks and owning them. And you can see that the balance sheet expansion has been very uneven across countries. The biggest user of quantitative easing is Japan, or the Bank of Japan, the BOJ. The second biggest one is the European Central Bank. The European Central Bank does not buy equities, but they do buy a lot of lower quality credit. And then you have in the middle the Bank of England and the Federal Reserve. Lastly, you have the Bank of Canada, which is just a recent arrival to the world of quantitative easing. And essentially no other central banks have done it. So it's just kind of these big five central banks. But again, between those big five central banks, they have maybe 93, 94% of the global currency transactions are done in these five currencies. So what's happening in these central banks is very, very significant. Now, the relationship between quantitative easing and currency values is not so obvious. The kind of hypothesis is that quantitative easing probably weakens a currency. So if two countries are doing QE, the country that does more of it's more likely to weaken its currency. So this may also explain why it is that the euro has not done particularly well, despite the fact that Europe runs smaller budget deficits and runs a trade surplus, whereas the US runs larger budget deficits and also a large trade deficit as well. Likewise, Japan, which is sort of the king of quantitative easing, it may explain part of the reason why the yen has weakened so much since 2011 was the fact that the Bank of Japan has been much more aggressive in using QE than has the Federal Reserve. So that kind of covers the really big currencies, the yen, the pound, the euro, the Swiss franc. We're going to come back to the pound and talk more about the pound in a few minutes. But now I want to transition and talk about another set of currencies. So the currencies we've talked about so far, all of these are sort of big service economies with also an industrial base. So you have the United States, Europe, and Japan. With very established currencies. A lot of other currencies in the world are currencies of commodity exporting nations, of which Australia is an excellent example. So Australia, for example, its exports, its two biggest exports are coal and iron ore. And both of these exports in some ways are in pretty bad shape. The world is trying to get off of coal very, very quickly because coal contributes more to global warming than any other single source of fossil fuels. Because when you burn coal, 100% of the output is carbon dioxide. By contrast, when you burn natural gas, only 1/3 of the result of that is carbon dioxide, and 2/3 of it is water vapor. And when you burn gasoline, for example, or diesel fuel, it's somewhere in between those two numbers, but it's not as bad as coal. So the world's trying very hard to get off of coal. Also, coal doesn't produce any sort of useful byproducts. Like natural gas, for example, we get as a byproduct of it, we get fertilizer, which can be used, of course, to plant fields and grow crops. And of course, crude oil produces tremendous amounts of other products, including all of our plastics, is maybe the biggest single output of crude oil, but coal has no added benefits. Everybody's trying to get off of it. So this is not good news for Australia. Also, iron ore. Iron ore is mainly consumed in China. China buys about 2/3 of the world's iron ore. And this is in some ways bad news for Australia too, because in Europe, for example, or in North America or Japan, when we need new steel, we have a lot of old automobiles, buildings that are being torn down. We have a lot of scrap that can be recycled. As China went through this tremendous growth cycle over the last 40 years, they didn't have that. They had to build everything new. So they had this tremendous demand for iron ore, which was great for Australia. But the problem now is that the Chinese economy is maturing. So they too in the future will begin to do a lot more recycling, and they won't need as much new iron ore from Australia or from Brazil for that matter. So the Australian currency follows its commodities. The same thing is true for Canada. There's a very tight relationship between the Canadian dollar and its major exports, which include crude oil, which is about 40% of their exports, lumber, as well as many other goods, wheat, canola oil, which is called rapeseed oil in Europe, aluminum, natural gas, coal, etc. And this is also true for many emerging market currencies. This was true for Brazil before the pandemic. The Brazilian real traded very tightly with various commodities. After the pandemic began, there was a divergence, and I think that's probably in part because Brazil was hit so hard by the pandemic and had such a tremendous loss of life, and much harder, I think, than most other countries on a per capita basis. And so that, I think, really contributed to a lot of weakness in their currency. Also, because of COVID, Brazil had to shut down its iron ore mines for several weeks. Even though the price of iron ore rose, Brazil wasn't producing as much, so it didn't see the full benefit of that. And then lastly, Brazil has also been hit by a drought during the last year. So even though soybean prices and sugar prices, et cetera, have gone higher, the production in Brazil has fallen a bit because of the drought. And so that's also caused commodity prices to go up, but it's of no benefit to Brazil. The farmers are not necessarily able to take advantage of higher prices if they're not producing as much. That same phenomenon is true of Russia. Russia's currency, up until 2016 in particular, used to move very closely with the price of oil. The price of oil and refined petroleum products is very important because it's about 75% or so of what Russia exports. And the rest of it's mainly industrial metals, coal, and wheat. And so Russia's also been hit very hard by COVID, and Russia also had to cut back on its oil production because of its agreement with Saudi Arabia and the OPEC countries not to overproduce. So oil prices have rebounded, which ordinarily would have been good for the ruble, but Russia's not been able to take advantage because they're not producing as much oil. Also, Russia has experienced some weather problems as well, and they've also put caps on or even bans on exporting wheat. So wheat prices may have gone higher, but this is not earning more foreign currency for Russia. So their currency has not really benefited from the pandemic at all. So I do want to come back to the pound, because the British pound is sort of an interesting currency. It has a lot of politics. and it also in part is a commodity currency as well. You can see that the pound is, of course, closely related to the euro. The way I would categorize this is you can sort of view the euro as being the earth. We can first of all view the US dollar as being the sun. It's at the center of the currency solar system, if you will. The euro is sort of like the earth, and the British pound is sort of like the moon. It circles the Earth and sort of orbits around it. Or maybe a better analogy would be the euro is more like Jupiter. It's the biggest planet in the solar system that orbits the US dollar. And the British pound in that case would be like Ganymede, which is Jupiter's biggest moon. And then of course Jupiter has lots of moons that orbit it, including the Swiss franc, the Norwegian and Swedish kroner, as well as a lot of the Eastern European currencies like the Polish zloty and the Hungarian forint, for example. But in any case, what happens in the euro area has a tremendous influence on what happens in the United Kingdom. And if you look at the day-to-day correlation between the two currencies, it's always positive on a one-year rolling basis. And sometimes it's pretty high, like in spite of Brexit over the last year or so, there's been a 0.6 correlation between the pound versus the dollar and the euro versus the dollar. So the British pound sort of orbits the euro currency. And the reason for that is that Britain does a tremendous amount of trade with the European Union and with the Eurozone in particular. About 44% of the UK's exports head to the EU. Where only 16% of the EU's exports head to the United Kingdom. So it's pretty clear which of the two currencies is more important. That's also reflected in the global central bank reserves, where the euro currency is about 10 times more present in their reserves than is the British pound. But the British pound also has an aspect of being a commodity currency, and this is because for the most part the euro area doesn't really produce very much petrol. There are tiny amounts of petrol that are produced in France, Germany, Italy, Portugal, Spain, but the production levels are very, very small and not enough anyway to meet the Eurozone's demand for oil. So the Eurozone is an importer of oil, whereas the United Kingdom discovered, along with Norway, which is also not part of the European Union, North Sea oil in the 1970s, and they really began to exploit it at the end of the 1970s. And so from 1980 until around the year 2000, that production generally grew, not always. But when it was growing, the pound was often strong, and when it was shrinking, the pound was often weak. Since the year 2000, North Sea oil production mostly has been on a decline, at least up until 2015. And so during that time, the pound fell versus the euro. So a lot of the reason why the pound has become a weaker currency is because of trade. The UK has gone from being a net oil exporter to now being roughly evenly balanced, or even a slight net oil importer. That said, the pound still does correlate fairly strongly with oil prices. It didn't seem to correlate very strongly with oil prices up until the late 1990s or early 2000s. But then as the price of oil soared during the 2000s, the British pound became a very strong currency versus the US dollar. And when oil prices crashed in 2008, since that time, the British pound has often followed the price of oil. So this is because Britain, even though it's a net oil importer now, it still has less of an oil deficit than Europe does, or the United States for that matter. So it's not so much that Britain benefits from higher oil prices, that it's less harmed by higher oil prices than is the Eurozone or the United States. So the other thing about the British pound, of course, is politics. Politics weren't particularly important until the Brexit referendum. But the Brexit referendum provoked a very sharp collapse in the British pound that many of you probably remember in the summer of 2016. But then since then, the various stages of negotiation, whether it looked like they were going to have a deal or maybe not going to have a deal, and then the election of Boris Johnson in 2019 have provoked a lot of subsequent volatility in the pound. I would guess that a lot of this volatility is now behind us. The Brexit issue has been settled. The UK officially left the European Union over a year and a half ago. Brexit, in a more meaningful sense, started to take effect earlier this year. But that said, there are still ongoing negotiations about different aspects of Brexit, including what to do about Northern Ireland, where the border should be. In January this coming year, in 2022, a bunch of other smaller changes will begin to come into effect. For example, when people in the United Kingdom start traveling, they'll have much higher phone charges when they go to Europe, which should be fun for us. Essentially what Brexit amounted to is a gigantic tax increase on the United Kingdom. Before Brexit, on average, a UK company doing business with the rest of the European Union had to do 7 administrative steps, including really basic things like payment and invoicing. After Brexit, they have exposed themselves to a tremendous amount of bureaucracy. So now on average, for a UK company to export to the EU, they have to fill out on average 39 different documents and gain approval from many different agencies. And then also, of course, you experience tariffs that they were exempt from previously. So that's why the currency has been so impacted by politics. But hopefully that's mainly behind the currency now. The last thing I would mention is interest rate differentials are also a major driver of the pound versus the US dollar. The British pound has also seen its interest rates fall relative to those in the US. So it's been a major driver of the pound. And in terms of the markets actually think that the Bank of England will raise interest rates more quickly than the US will in the next year or two. They think they'll get off the ground before the US, but then subsequently, they think they'll have a much slower path of tightening than the Fed will after 2023. So there's just one last currency I feel like I really have to mention. That's, of course, China. China's currency is sort of an odd situation. China's currency, unlike the other currencies we've talked about, is not a free-floating currency. The Chinese government manages its currency very, very closely versus other currencies. But the reason why I mention it is that, first of all, in the future, it might become a more significant currency globally. And then secondly, it has a lot of influence because of the size of the Chinese economy. So China's currency in the last several years has been quite a strong currency. Part of this is because of trade. China runs a trade surplus, and that trade surplus has been expanding for the most part, particularly during the pandemic. If you want to know where China's currency is going in the future, one thing you can look at is its foreign exchange reserves. When its foreign exchange reserves are increasing, that's often a sign that the Chinese currency is likely to drift higher versus the dollar and versus other currencies. But there have been times, particularly in 2014 and 2015, 2016, when the Chinese foreign exchange reserves have been falling. So in other words, the Chinese government has been selling its foreign exchange reserves during that time in order to defend the value of the currency. When that happens, it's often a sign that Beijing will be forced to devalue its currency. It did devalue its currency starting in August 2015. That sent shockwaves through markets, particularly commodity markets, but also emerging market currencies did not like that piece of news, etc. More recently, China's currency reserves have been stable and during the pandemic even increasing very slightly. That suggests to me that China's probably not going to devalue its currency in the near term. Some people do ask the question, will China's currency eventually replace the US currency as the dominant global currency? My short answer to this is maybe, but it's not going to happen soon. We talked about the US having the global reserve currency, and so that comes with a benefit, which is power, but it also comes with a curse, which is trade deficits. So China, as you can see, runs trade surpluses. The trade surpluses are an important source of their economic growth. If they move to a trade deficit, that would mean that they would have to start consuming a lot more domestically in order to offset that. So I think that China is not really ready to have the global reserve currency. In order for that to happen, they first have to increase domestic consumption as a share of their GDP. So I've been talking for a long time. I think we have perhaps 10 minutes or more to open it up for questions if you have any questions.
Yes, of course. Thank you, Eric, for a great presentation. Of course, now we are available to questions. Please remember you could put the question in English or in Portuguese, no problem at all. If you put in Portuguese, I will translate it to Eric. If you put in English, I will transmit it to Eric. So we could do it. About questions, we have one that came about a minute ago, asking about the trade deficit in the US versus the Europe deficit correlation. And the attendee is saying that if he understands well, the trade deficit and the Europe deficit has the same correlation because the economy goes a little bit weaker every time that increases the deficit.
Yeah, so that's true. So there's the phenomenon of GDP accounting. So in GDP accounting, they say that the GDP is equal to government spending plus investment spending plus consumer spending plus exports minus imports. So in that sense, if you're running a bigger trade deficit, that automatically means that your GDP is not doing as well. So that's kind of in theory, but in reality, what often happens is a strong economy, people are wealthier, so they're able to spend more money, and so they're able to buy more imported goods. So economic theory says one thing, but economic practice and reality says something different. So typically, if you have two economies, one of which is growing strongly and the other one of which is growing slowly, the more strongly growing economy will begin to run a bigger trade deficit, and the weaker economy will often begin to show a trade surplus. That's not always the case, but that has been the case between the US and Europe over the past several years. And in fact, the reason why Europe went to having a trade surplus was because of its crisis. It was essentially because in 2010, 11, 12, 13, countries that previously, like Portugal, Spain, Italy, and Greece in particular, and also Ireland, that would have previously devalued their currencies versus the rest of the European currencies, couldn't do that because they were locked into the euro system. So instead, they had to do an internal devaluation. They had to suffer periods of high unemployment and falling wages in order to become competitive again. And that meant buying less products from abroad and producing the products that they made domestically less expensively so that they could export them inexpensively and start having a trade surplus.
Okay, thank you, Eric. I think that answers the question. The other question that I have is very, very correlated, saying that negative interest rates cause the economy to grow more slowly, and then if this in this same moment is penalizing the economy in the US and in Europe in your see.
Yeah, so well, first of all, the United States never went to negative interest rates. The United States has gone to close to zero, but interest rates have never gone negative in the US. So there is sort of a paradox. So on the one hand, negative interest rates appear to hinder economic growth, to cause the economy to grow more slowly, which should probably be bad for the economy. But the reason why it's bad for the economy is people start hoarding the currency. People start taking the currency and not spending it and just sort of keeping it for themselves, which causes the increase in value. So it's sort of a paradox, where negative interest rates appear to cause people to buy more of a currency and hold it rather than spending it on other things, which is paradoxical, but it seems like the policy just doesn't work and it just damages confidence. Yeah, I think the reason why the ECB went to negative rates is they hoped that the negative rates would help to cause inflation to go back up towards 2%, because Eurozone inflation, for the most part, has been running at around 1% per year, which is way below the ECB's target. But the thing is, the ECB has been at negative interest rates now for almost 7 years, and they still haven't come back to positive inflation on the core inflation number. Even after all the pandemic spending, the core inflation number, the most recent reading was 1.6%, and the one before that was 0.7, and the one before that was 0.9. So they're still very far away from achieving inflation. There are a couple other economic theories of currencies that I think are worth mentioning. One of them is Robert Mundell's theory, which won the Nobel Prize, I would say sometime in the early to mid 1980s. And his theory basically says that the currency with lower interest rates should strengthen against a currency with higher interest rates. It's a complex thing, but basically the forward curve would suggest that the euro would go higher versus the dollar because its interest rates are lower. Now, in practice, as we've seen, that doesn't always work. Often countries with rising interest rates bring in capital because the higher interest rates attract capital. But yeah, the negative interest rates in any case don't seem to be very productive.
Okay, thank you, Eric, about this question too. We have, I think, a last one about the Fed meeting today and its impact on forex pairs. Any consideration about it?
Yeah, so the Federal Reserve, as you pointed out, is going to meet today. I think what the Federal Reserve is going to do is they're going to prepare the market for a bigger announcement that they're going to make either in November or December. So the announcement that I think they're going to make, they're going to prepare the market to hear about in the future, which I know is a lot of, the Federal Reserve is very careful. Essentially, they prepare the market to be prepared. So they're going to prepare the market to be prepared for quantitative easing to come to an end in the US sometime next year. So quantitative easing, that will mean that the European balance sheet will probably continue to expand more than the US balance sheet. That's probably a little bit negative for the euro, but not very. For the most part, currency pairs show only a very modest reaction to central bank policy, at least in recent years. Prior to 2008, the reactions were much stronger, but after interest rates hit zero in so many different countries, interest rates are a little bit less important now to the markets than they were before. But after interest rates do start moving positive, maybe later this decade, that might change and they could become more important once again. But I don't think the Federal Reserve's announcement tonight is going to have a big impact on the markets, on the currency markets. I think its impact, if it has one, will be mainly felt in the interest rate markets.
Okay. Thank you once again, Eric, for all the explanation about these questions. Thank you for your presentation. I don't know if you want to add anything else about this subject, anything that you want to say, please be my guest.
Well, yeah, I guess I can only say thank you very much, mucho obrigado, and I hope to be back with you maybe sometime this fall, a couple times more, if we want to talk about other asset classes that we haven't spoken about yet. I think we haven't done, I can't remember, is it metals or agricultural goods? There's a lot of things we'd love to talk about if you want to. So we're very enthusiastic to work with you, and thank you so much for your time.
Okay, thank you, Eric, once again for everything and your presentation. We will consider it, of course, and we could try another webinar on that subject. It means very well. Now em português, obrigado a todos por mais esta sessão do Chicago Trading Sessions. Lembramos que esta foi a sessão teórica sobre pares cambiais e que na próxima quarta-feira, pelas 21h05, estaremos cá novamente para a sessão prática, novamente com o Ricardo Continhos e com o Eduardo Nunes, trader do BIG. Teremos todo o prazer em ajudar-vos a compreender tudo o que foi falado nesta mesma sessão e até apresentar aqui alguns exemplos práticos das correlações aqui apresentadas. Qualquer questão, ficamos ao vosso dispor, tem os canais para contacto connosco. Relembro ainda que nas próximas sessões vamos chegar às sessões exclusivas para clientes big com plataforma ativa. Por isso, peço a todos os presentes que ainda não tenham essa possibilidade e que tenham esse interesse, procedam aqui à abertura das vossas plataformas para que possamos depois, nessa vertente mais prática, mais direta, falar aqui de estratégias, efetivamente, sobre futuros e opções, e que acredito que vai trazer aqui um conhecimento adicional e uma implementação de todas as sessões que tivemos até agora em conjunto com a CME. Agradeço a todos mais uma vez a vossa presença. O meu nome é Ricardo Contins e ficamos ao vosso dispor para o que for necessário. Obrigado, uma boa tarde e bons negócios.